For most traders, there's a tendency to get caught up in the day-to-day action, and very often people never bother to look at the big picture, get a better sense of what is really going on. Last weekend, last Friday, I cautioned people to watch that 1750 level. Um, the banks needed to make sure that gold didn't close above that level, and right on cue, about an hour before the market closed last Friday, there was a big attack to prevent gold from closing above that level. And so um, gold is still basically just churning below this 1800 resistance zone. As I've noted before, the banks are still stuck in this huge short position. They have been ever since this bottom back here. They've really had almost no opportunity to escape from that. So they're losing billions and billions of dollars. So they're going to continue to try and attack gold and prevent it from going higher. Um, they were not able to keep gold suppressed below 1700 the last few days. And eventually, I think they're going to lose this battle, and gold is going to break out above this resistance level and then test the all-time highs here. And then at that point, I think it's likely we could get a um, longer, bigger and longer correction. Um, Again, I've watched as traders have panicked, as the miners have pulled back. And again, if you look at the big picture, nothing really out of the ordinary, or nothing drastically wrong is occurring. We've had the breakout above the baby bull high, above this resistance zone, and then as gold has pulled back, the miners or entered that box that I've been warning was coming. The miners have just pulled back and retested this breakout. They haven't negated this breakout. So again, nothing technically is wrong with this picture. Yet I see a lot of people becoming very negative on the metals, when in reality, um, nothing is nothing bad is happening. This is just a completely normal retest of this breakout. I pointed out previously that the semis uh, did the same thing during the 4-year cycle low down here. They retested that 2000 high at about 1360, I believe it was, and now they're on their way up, and I think the breakout will be sustained at this point. So nothing unusual happening here, just a breakout, but one that was not able to be sustained without at least first retesting the breakout. If we were to lose this breakout, come back down into this consolidation, or let's just say this consolidation area, then yes, then we've got something wrong happening, and at that point, you'd want to probably get back on the sidelines and get out of the way, on the possibility that maybe the banks have regained control of the metals. Moving on to silver, same thing. Silver just came up to test this resistance zone here right around $19. Pulled back from that resistance zone, wasn't able to get through it on the first try. Um, com Completely normal. It would have been um, a bit unusual to go through this resistance on the first try, and it didn't. But I think silver is going to um, the correction is going to stop, slow down, turn back around, and then we're going to come up and retest this again. And I suspect on the second try we'll probably break through, and then we'll probably come up and test this next resistance level here around $20. So nothing out of the ordinary happening. The one area where something bad is happening is in the dollar. We've been hearing from the permabulls for 5 years that the dollar was going up and was going to 120. Is going to test 120. The dollar was the prettiest pig in the farm yard. On and on and on, and that they have just been wrong for forever. This this move down into the 3-year cycle low was a warning. It went too far and broke below the 200 week moving average. That was a sign that something was wrong. And I've been warning that this was happening for a couple of years now. That we're just in a currency war. Every country wants their currency. They want to suppress their currency against their neighbors, and the ECB has been, intervening in the currency markets aggressively as the Bank of Japan, and they've managed to keep the dollar propped up far longer than I think would have happened naturally. But I think they are starting to lose control of the currency markets. I don't think they're going to be able to keep the dollar propped up any longer. And so this trading range that the currencies we're in right here has broken to the downside. The ECB was not able to keep the euro suppressed and the dollar propped up, and the dollar broke out of this back and forth consolidations, broken to the downside, and this week it's trying to close below the 200-week moving average, and the currency interventions have been using this 200-week moving average repeatedly, time after time, as a technical support in their efforts to keep the dollar propped up and keep the euro suppressed. And this is starting to break down. Well, of course, we'll have to see how the week ends, whether or not they can prevent it from closing below there. But ultimately, I'm pretty sure that no amount of currency intervention is going to stop this, and that the dollar has now started the move down into its 3-year cycle low, the same thing that was happening here. And the fact that they have kept this propped up far longer than it should have been, if allowed to trade naturally, probably means that we're going to have some kind of crash in the dollar, just like we had a crash in the stock market. It was propped up and pushed, artificially high with all the QE last winter, and then that's what caused the crash in the stock market, which was of course exacerbated when we idiotically stopped the world economy. But I think I think we're clearly moving down into the 3-year cycle low. That's going to be due sometime, and they usually last about 3 years and 3 months, but can run up to 3 years and 6 months. Very often we'll get a currency crisis in the fall. So due sometime in the spring of 2021, but we may actually reach the final low maybe in the fall of 2021. So all of the dollar bulls, I think they are going to continue to be wrong, and we're going to watch the dollar collapse over the next let's call it year or so, and probably we're going to break below these lows here before we get our next 3-year cycle low. And this is going to make it harder and harder for the banks to keep gold suppressed, keep it locked below that $1,800 resistance zone. And once that breaks, and once we eventually break above the all-time highs at 1900, we're probably going to see a period of about a year to a year and a half where gold just goes crazy to the upside, and we finally get our bubble phase in the gold market.